Netflix initiated the FANG earnings season. They reported yesterday, so let's check out how it's doing and why the stock went down at the beginning after they reported earnings. Hello everyone, welcome back to the channel. If you're new, please consider subscribing and smashing that like button since it really helps the channel out. Also, I have a completely free Discord group chat, which a link for that is down in the description below. Now, we all know that 2020 was a crazy year for many companies, including Netflix. As we were all working from home, they saw a huge acceleration in growth, and many were expecting that to affect negatively this year. But did it really affect the growth? Let's see. Netflix missed earnings by 0.19 cents as reported EPS of $2.97, and we're expecting $3.16, but slightly beat revenue as they reported a revenue of $7.34 billion versus $7.32 billion expected, and also beat on global paid net subscribers additions, which added 1.51 million versus a 1.19 million expected. The thing is that they saw a decrease in subscribers in the US, which we will talk about that later. And also, Netflix said it expected 3.5 million net adds, while investors and analysts were anticipating 5.46 million for next quarter, which in my opinion is one of the reasons why the stock took a hit right after reporting earnings. Now, let's get into their financials. First of all, they reported a revenue of $7.3 billion, which is a 19.4% growth, which is a nice growth, but can be concerning that their revenue might be slowing down. See how their growth was always in the low 20s to mid 20% and are even expecting it to drop even more to 16.2% for quarter 3, which if we see that other FANG stocks are growing at a faster pace than Netflix. So in my opinion, Netflix will have to find a way to boost their growth somehow if they don't want to fall behind. Obviously, we gotta wait for Amazon, Facebook, Apple, Google, and Microsoft to report their earnings, but still, I think Netflix is the slowest one right now. This is why I said that their acceleration in growth in 2020 is affecting them today, and we are going to confirm that with their paid subscribers in a minute. That is why I think that even though I don't like when such a company starts seeing a slowdown in growth, we have to also consider or take into consideration that we already knew that 2021 was going to be way different, as 2020 was an outlier because of the pandemic and Netflix growth was way better at the moment. They reported a net income of $1.3 billion, which is a decrease quarter over quarter, but a growth year over year. Still, remember that they missed expectations on earnings. Now, one of the reasons why they are seeing a slowdown in growth, according to them, is also because last year production was delayed due to COVID, and those were TV shows and movies that were supposed to come out to the public during quarter 1 and quarter 2 of this year, 2021, meaning that they think that because they don't have new content, they saw a slowdown in paid subscribers growth, which means that they expect that to come back to normal once they start posting or adding more and more content into their library, which kind of makes sense. Now here we can see how their global streaming paid membership growth is decreasing because of the pandemic. See how they grew 27% in quarter 2 2020, 23% in quarter 3 21, almost 22% in quarter 4, and well, quarter 1 2021 was already a way less growth of only 13% and 8.4% for quarter 2, and even though I know that sounds very bad, it was because of the pandemic. Maybe without the pandemic they could have continued seeing a more steady growth during 2020 and 2021, but we can't know as they only added 1.54 million paid additions when the slowest one was quarter 3 last year with 2.20 million, so this was below that. And even though they are expecting 3.5 million additions in quarter 3, analysts were expecting over 5 million. Lastly, they reported a negative free cash flow, and we are going to find out why. Now let's check their regional breakdown. First we have UK, which is United States and Canada, where they did not add anything as they actually saw a decline in their biggest market, wiping out almost all the new paid members added in Q1 2021 and have been practically flat for the past 6 months. Might this mean that Netflix has peaked in North America? We can't know, but we saw an acceleration in 2020 and now they can only raise their price to see an increase in revenue from North America, as they did since they increased their price by 10% year over year. And that could be a good and a bad thing at the same time, because there is a limit. If they overprice their service, many will start canceling their service or their subscription, affecting Netflix growth. But if Netflix is able to increase it without people freaking out, then they will continue seeing a growth in revenue. Now let's continue. Then they have EMEA, which is Europe, Middle East, and Africa, which is basically flat as they only added 0.19 million, which is 190,000 subscribers, but were able to increase their price by 11% year over year. Then Latin America has been having a steady growth, added 0.76 million users, but were able to only increase the price by 1%. Lastly, APAC, Asia Pacific, was the one with the highest growth, over 1 million net additions, meaning that most additions come from Asia and Latin America. Notice how outside the US, the average revenue per membership is way lower, meaning that they got some room to grow internationally and maybe pop up their price, but not that much, as in my opinion, regions like Latin America are more price sensitive than North America or Europe, for example. Okay, so we already talked about their revenue. We can see that they have increased their marketing expenses a bit in Q2, as well as technology and development, which is why they saw a decrease in operating income quarter over quarter, even though they had a higher revenue in Q2. Their balance sheet is quite healthy, cash and cash equivalents of $7.7 billion, total assets of $4.9 billion, their content assets being the highest asset, which is what gives Netflix the competitive advantage, have only liabilities of only $27 billion, which is nice as well. They do have a long-term debt of $14 billion, almost $15 billion, which is normal for Netflix and any company within the industry, as they need to spend a lot of money producing new content or buying rights to certain shows, which is why we might see this debt increase in the coming quarters if they need to when creating more content, but it is not something to be concerned of. Now, even though the streaming industry is in its early days, Netflix does have competition, as streaming represents only 27% of US TV screen, compared with 63% for linear television according to Nielsen. Still, Netflix is the dominant with 7% of screen time, then YouTube, Hulu, Prime Video, and lastly, Disney. Obviously, many could argue that by investing in Netflix, you only get a streaming service, while if you invest in YouTube, which would be Alphabet or Prime Video through Amazon or Disney, you will be investing on e-commerce, theme parks, cruises, Google, advertising, music, and more than these other companies offer, and are also seeing a better growth than Netflix. Not on their streaming service, but on their core businesses for those companies. Now, Netflix has announced some weeks ago that they are expanding into the gaming industry. We still do not have much detail of how it will work. If they are going to create their own games, will they allow developers to create games within their platforms or anything, but this could be a game changer for Netflix or a complete failure at the same time. Netflix said, and I quote, "We view gaming as another new content category for us, which will be included in members' Netflix subscription at no additional cost. They will primarily focus on mobile devices." The company recently hired video game executive Mike Verdi from Facebook, where he was vice president of augmented reality and virtual reality content, which will help them go the right direction with this new expansion. We don't know much, we can't say much, just have to wait and see how everything will work, how this will affect the company's revenue and expenses and balance sheet and everything, to see if it is the right decision or not. Analysts do believe this will need a lot of time and money, and even said that this might be a costly, bold move. Making games for free will drive users for sure, but it is not sustainable long term as a business model. Now, do you think this is a bold move from Netflix? Let me know in the comment section below. Hope you enjoyed the video. Please smash that like button and subscribe since it really helps the channel out. Thank you and see you next time.